Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis, updated commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions, and if you need help with anything, check out finding-value.com. I dive deeper into all these areas and topics, looking for potential investment opportunities, sharing all those opportunities with everyone in the community of what I'm doing and how I'm setting up all this stuff. We do have a coupon code, Black Friday, one word. Black Friday gets you a 50% off discount for the 1 month membership and a larger discount on a yearly membership if you'd like to sign up for the yearly or if you want to switch from a monthly to a yearly. It applies to all the accounts. All right, let's dive in. Let's take a look, see what's going on. Starting with the dollar. The dollar had a pretty big move to the downside with yields. And I did adjust my blue line here. I put it on top of this turning point. So turning point, turning point, turning point, turning point. It seems like a better fit and support there. So we pulled on back. Is it a reversal candlestick? Yes and no. The reason I say no is we've got this little wick at the bottom. There was some buying pressure towards the end of the day, most likely in yields, or in bonds, I should say, pushing yields up a little bit. So it is technically a bearish engulfing candlestick, but they're generally stronger if you close towards the end of the day there. What it is, we'll see what kind of follow through we get over here. We are still above the support level. So it's not like we're falling off a cliff here and that the dollar has no support. There's a lot of support underneath it. And we need to see what kind of follow through we get over the next week or so. Yields were dropping like a rock, dropping like a rock. Now, this is where you could maybe get a little bit better case for why the dollar could drop, maybe even more so. We've got a pretty big downward move today in the 2-year yield. It is below support. So what generally occurs is you break below support, which is this guy here. You come up and then you roll over and start to sell off. That does look like the case here where we're coming on up and we are potentially rolling over. Let's again see what kind of follow through we get if there is any. If we see strong selling pressure, big old candlesticks that are red, that means there's a lot of pressure to go down in the 2-year yield. If it's just small little candlesticks that just kind of move sideways and don't really do much, more than likely that a new trend has not begun yet. So that is what we're looking for. The 10-year yield down 3%. That's also getting shellacked. Big move lower. We had some resistance above us, and that resistance is still there. We basically were up on it. And here we are selling off today with lower yields. Now, this is the lower 10-year. This is going to convert into lower mortgage rates. So a lot, when you look at these charts, they mean something. I'm willing to bet that home builders are up on this news. I'm willing to bet that some of the inflation sensitive assets will like a 10-year yield going lower. They might not like it if we had a selling event today, but it will like it in the future if rates continue lower, depending on how they continue lower. And then the 30-year is down 3%. That's still above a lot of support. But it is a pretty large selling pressure candlestick day. And that does change a little bit of the momentum that we had generated here into potentially downward momentum. So we'll see if we can get through this resistance support area, depending on how you look at it, and if we can break on through that. TYX TNX ratio, it's holding flat. It's like everything moved pretty similarly today. The 10-year and the 30-year both went down about a little over 3%. TLT bond prices obviously going higher. And again, we are up under a lot of resistance. There's a lot of resistance there. Now, I know that Trump wants yields lower. So maybe they're in there doing stuff with yields. I don't know for a fact, but maybe they are. Maybe they're in there buying bonds, driving yields lower. Could potentially be the case, but they're going to have to get through some resistance here on the 20-year TLT. And then the 2 and 10, the yield curve, we had the short end of the curve, the 2-year fall less than the 10-year. So we actually ended up inverting the curve and coming on upward because of the dynamic between the 2 and the 10. We'll see if that continues. Very weird dynamics is what I'm going to say. Usually what we see if we get a slowdown in the market, usually we see the 2-year drop like a rock. And then the 10-year is a little bit more stable on the long end of the curve, and this generally falls. But today, we're seeing the long end of the curve move all over the place in relationship to the 2-year. Gold getting hit pretty hard, down $83, $84 an ounce. This does look pretty bearish to me because we've got a reversal candlestick here and here. We've broken through the uptrend support. We have less buying pressure than the fall. And now we've got another huge bearish engulfing, which means that we potentially could head lower or consolidate sideways with this type of action that I'm seeing. It is very similar to previous action that we received when we broke through. I'll just say something like this. Let me see here. We broke through that, kind of a double top, broke through that, and then we consolidated sideways for a while. You can also put something on the lines of coming up like this, breaking through that steeper trend line and consolidating sideways for a little bit. Could something like that occur right now? Yes, because that's the action that we're seeing in the trading here. Looking at silver, silver also getting a little bit of selling pressure, down about 3%. It is a bearish engulfing, and we've gotten quite strong selling pressure in that circle there versus the green army. Could there be more, further consolidation or further downside? There could be, and we have to see what it looks like. On a longer term time frame, things still look very good, but it is possible that we can do stuff like that. So patience, no matter what investment you are in, it's going to require patience, even if you're breaking big long-term patterns, because the bigger the pattern that you break, which we broke this gigantic pattern, it doesn't mean that things resolve immediately. They might take time, and we'll break through a lot of these resistance areas that we encounter in the bull market as we go through it. Platinum also selling off about 3%. Everything was down about 3% today. Gold, silver, platinum, palladium down a little bit more than 3%. All GDX, silver, everything. Crude oil down 3%. Everything's down 3%. Kind of weird. But getting some selling pressure there. Hopefully we get down here. I'd actually like to buy more if we do get down there. Hopefully it stays down there so I can acquire at least a good amount. And then palladium down 4%. We're still ping-ponging between resistance, support, resistance. Got a little bit above it, came right back into that resistance support squeezing area. GDX down about 3%. We're down a little bit in GDXJ and we're down in SILJ. And they all have these patterns that have come and entered from the top side down, which means we could pull back further in these in the short term. On all of them, GDXJ, they all have these kind of upward facing, rising wedge patterns where we could fall. We are up against support for GDXJ and GDX. They're all very similar. You can see that we've fallen out of that uptrend. Very similar to what gold has done. XAU to gold ratio, again, we're real low here. It's still an amazing opportunity, but I can see people are going to be probably getting antsy because the short-term market movements haven't been agreeing with my bullishness down here. This is a long-term play. It's buying something that's cheap and then waiting for the market conditions to become favorable for our assets. So this is what I would consider to be an ideal entry point for the long term for those that are patient. And this is gold and silver mining companies versus gold. Crude oil down about 3%. I'm sure a lot of people who are very bearish on stuff, on crude oil, are probably rejoicing. We do have a bearish engulfing candlestick today. We are above a lot of support. We are up against a little bit of resistance in that white line there, and we'll see what follow through we get today. If we get weak follow through, and then we have to watch to see if we get another big candlestick. But if we get not much follow through and it goes sideways and we get some big green army candlesticks like this guy, we could head back higher. So let's see what occurs over the next week or two and what kind of follow through we get here. Now, if we see the 2-year yield drop like a rock, watch crude oil, because if it starts to drop, you could see a further move lower, especially if we get the yield curve to really start to uninvert. But that isn't the situation yet. TTF gas up about 3% today, ripping it, and that still looks good. We do have a reversal candlestick here, but no follow through on it, at least not yet. We've got natural gas in America up about 6%. We had a big selling pressure candlestick yesterday. And again, there's going to be a lot of volatility here. Weather coming through and all that stuff matters for natural gas quite heavily. But we've broken the big downtrend line, and it looks good to continue higher if it wants to. Our boy XOP, yeah, you know me. Now, this is one thing I want everyone to pay attention to. XOP is down 1.87%. Crude oil was down over 3%. The short-term outperformance means something. It's holding on, waiting, I think, for the right conditions for this to really start to move higher. We've broken out of the downtrend, which is bullish. We've broken out of the big picture trend line. Now, most likely, we are going to do a retest. So we're probably going to come down and do a retest and kiss that thing, on the lips here and do a retest. So that's my guess. We'll see what happens. We'll monitor it together. OIH also getting a little bit of retest against some resistance here, and we'll see if that support now holds. We've got Newcastle coal futures getting some selling pressure today. Pretty big selling pressure, potentially reversal candlestick. It was down 1.32%. But again, it doesn't look horrible on the longer term. We're right up against resistance. We'll see if we punch through. And I do think there's a relationship between coal and natural gas. Sprott Uranium Trust, not much selling pressure today. That's looking good compared to some other sectors that we're seeing a lot of selling pressure. Still in this gigantic flag pattern there. Looks pretty good. Uranium futures pricing pulled back. Looks like it pulled back Friday, 1.3%. But still looks okay. It's still holding on, and we got that big bullish engulfing there. URA down about 3%. It's following all the other energy sector names and what oil and all that stuff's doing. So it's down, still looks good, sitting on top of support. URNM down a little bit. We have a little wick at the bottom, a little bit of buying pressure, but still just a large candlestick. It's not a reversal candlestick or anything. In URNJ, it's the same thing, just tracking sideways here. Looks like a flag pattern, potentially. And we'll see what follow through we get. Copper up a little bit. It's liking those lower yields, lower dollar, right on support. We'll see if we get follow through. We've broken the downtrend here, kind of like a squeezing of a pattern, kind of broken out. It's doing almost like a double bottom. So I would favor a move higher if I were to guess. COPX still looking good, more or less just a flag pattern. Looks good to go higher. We've got iron ore, 0.4% lower. It's still just tracking sideways for the most part all through here. And I think longer term, this looks excellent to move higher. Looks excellent. Aluminum up 0.73%, right up against resistance. Still haven't broken out and started running, from this resistance area. So we're still stuck in it. Nickel down about 1%, and it's kind of finding some sort of support there. It's almost like a double bottom within a double bottom. Mu up 1%. We've bounced off that support level. I said I was real bullish here, which I am. And it's starting to move on up, so that looks really good. And these are going to be a little bit more sensitive to the dollar falling and interest rates falling. So these are going to be a little bit more tailwind happy here. So emerging markets looks like it's trying to break higher here. We'll probably see that move higher if those conditions continue. We've got KRE also up about 1.6%. We do have a little bit of a wick at the top, which means we had a reversal throughout the day with momentum heading lower. TAN up 4%. Again, these are the sensitive interest rate sensitive sectors and dollars. Lithium up 1.16. That does look like it wants to try to break out of this longer term downtrend line and get moving, hopefully. REMX also trying to break out. We've got good support here, and we are using that support at this time. Why that thing? Sometimes these lines move on me a little bit. Sometimes we've got Baltic Dry Index down 2.5%. We're underneath. We've just been oscillating about the support resistance line. Goes all the way back to the late 80s. XHB ripping higher. Now here's the thing, guys. This is important to watch. We're up 4.35% in home builders. If you go back in history and you look at the majority of the recessions, they come from the housing market. Almost all of them do. Like 90+% come from the housing market falling. Home builders are a leader to that move. So I'm going to put in Leonard Corp just so you guys can see, though everything logarithmic. Your recession coming on down. We had, this is your mid 70s recession. Your 90 recession is here. That's the move from there to here. That move there. You had the 2005 ultimate top and your recession into 2008. We had a recession here. This is from 98 to the year 2000 was where it bottomed, and that's where they lowered interest rates. So they were increasing interest rates in this pullback there, and a recession materialized shortly thereafter. But that was not a housing market driven recession. When they lowered rates, this started to go up. So the big recessions are all driven by real estate, and home builders generally front run that. We are moving higher in home builders. So if it's going to be a recession, I think it's going to rhyme with the technology bubble. I don't think it's being driven by the home builders and or by housing starts and stuff like that. Coming back, we've got Russell 2000 up 1.4, 1.5%. That's looking pretty good, and we're messing with all-time highs here. So that's looking real good there, and we'll see if we can break through. It's got a big bubble there, or bowl shape, I should say. SPX up 0.3%, again, real close to all-time highs. We've got the NASDAQ up 0.27%. This is kind of a bearish formation, to be honest. Usually when you kind of do that, it wants to go lower, but we'll see if there's follow-through. SMCI up 16% or so. Again, I'm not touching this thing. We've got NVIDIA down 4.18%. What's going on here? Rising wedge, false row over top, and now we're selling off. Is this the beginning of a larger pullback? Could be. It could be. And we'll see if this continues lower here for NVIDIA. Bitcoin down about 2.3% or so. It's getting a little bit more selling pressure. You can see it's obviously accelerated today. And it was also a strong reversal day where we were coming on up and reversed and sold off. We do have a little bit of a falling wedge there. So we'll see if we get any sort of bounce tomorrow. Ethereum up 3.5%. That is trying to break out from its resistance area. I think it will, and potentially run, could be pretty big. We've got MicroStrategy incorporated here. Now this is a big reversal candlestick. That big red candlestick there. We have a inverted bloody nose, and then we got selling pressure of minus 4.37%. We'll see if this is a potential top and we get some selling pressure or not. Generally, when you take a longer picture view like this, You get a sideways action here, you break out from it, and then a peak generally is indicated with these huge wicks at the top. It doesn't mean that the peak is necessarily at this exact moment, but when you get those big peaks, that is what happens. This is the last peak, and you can see that big wick at the top there. See that? This was back in 2021. So it goes vertical, sideways, up, huge selling pressure candlestick, then it comes down, and then you consolidate in an inverted head, inverted flag pattern, and it consolidates for a while. Are we at the beginning of a consolidation? My guess would be yes. That's my guess. Now, don't hold me to it because calling tops is really difficult, but it does have the characteristics of a potential topping pattern, and we'll see what follows from it. And then the VIX was down 4%, so we actually had less volatility today. Weird. But that's what we've got for today, guys. Give me a thumb up for the content, subscribe to the channel, subscribe to the website. Black Friday, one word put together, coupon code if you'd like to join the community. This next session on the weekend is on Sunday, 5 p.m. Mountain Time. And we're going to talk about portfolio allocation. I'm going to talk about risk and risk reward because they are connected. And I'm going to share a lot of opinions with all of that. It's going to be it's going to be very interesting, I think, because I don't know if people look at it the same way that I do. The way that I view things, I think, is the correct way to view it. And I'll just say this as a prelude to it. Uh, when you purchase something is part of your risk, is what I'll say. And you can handle and mitigate risk by knowing when to buy things, is what I'll say. And we're going to go way into it. But that's what we've got for today, guys. So we'll catch you next time. This is Finding Value.